Good morning, hello and welcome to Opening Bell. You're with us on Moneycontrol and we're coming to you live both on the Moneycontrol website as well as on YouTube. It's Thursday morning. I'm Surabhi Upadhyay. There's plenty to talk about and unfortunately the news is not all that great. We're starting the day with oil back at $100 a barrel. In fact, that's the biggest headline and that's what we have to take cognizance of because everything is stemming from that one fact. All of the efforts made, all of the talk that we've heard over the last 48 hours, the US promising to reopen the Strait of Hormuz, promising to escort tankers through that water channel, none of that has really materialized. Can we get the price of oil on the screen? Yes, there we go. $100 a barrel is back on Brent. This is despite the fact that the global powers, the International Energy Agency has decided to release a large stockpile of crude into the market. But nothing seems to be working right now. 10% rally on oil. That's how we are starting out this day. Now, before I get to the headlines, I just want to talk about the back and forth that's happening from Mr. Donald Trump as well. Now, yesterday there were various accounts that were doing the rounds. He first spoke to the journalistic website, the newsletter website called Axios. And he said that he can end the war anytime. So that seemed to give an indication that, could it be a hint that we're close to the end? There you go. He's saying at any time I want the Iran war to end, it will end. But then later he spoke with reporters and then there was a different account. He seemed to indicate that he's attacked everything in Iran. There's nothing really left to attack. However, the job is not done. So there, he says, well, they've lost the Navy, they've lost their Air Force, no anti-aircraft apparatus at all. The leaders are gone. We could do a lot worse. The US has hit Iran harder than virtually any other country ever, but we're not finished yet. In fact, I want to play out that soundbite to exactly interpret what is the US president indicating right now, because it's not helping the oil market, and that is the starting point. Quickly, let's listen into the US president, and then we'll get you the headlines.
And as we take decisive action to stop the threat posed by the terrorist regime in Iran with Operation Epic Fury. Is that a great name? Well, it's only good if you win. You can only do. And we've won. Let me tell you, we've won. You never like to say too early you won. We won. We won the bet. In the first hour, it was over. But we knocked out 58 naval ships. We knocked out their Navy, okay? Let's put it that way. But they also knocked out the mine layers. They call them mine layers. They put mines in the water. Lovely job. Isn't that nice? Blow up ships. And we knocked out 31 of them. We don't want to leave early, do we? We got to finish the job, right?
The headlines now. Iran attacks 2 foreign oil tankers in Iraq and the Dubai airport. The country has warned a long war that could threaten energy supplies. Meanwhile, US President Donald Trump says that the US is in a very good shape with its war in Iran and it may end soon as there is practically nothing left for American forces to strike after weeks of intense military operations. The US will strongly focus on the Strait of Hormuz. The International Energy Agency agrees to release 400 million barrels of oil, the largest volume of emergency oil reserves released in its history, in an attempt to counter the soaring oil prices amidst the war in West Asia. Of the 400 million barrels, US will be releasing 172 million barrels of oil from its strategic petroleum reserves. Well, none of this is helping oil prices. Brent crude jumps back above $99 per barrel. It sits at $100 per barrel as persistent efforts over the Iran war overshadow a coordinated release of oil reserves by major economies. Meanwhile, gold prices for the second day running continue to gain traction as surging oil prices tighten inflationary risks. Stocks on Wall Street end mixed, but the Dow futures are down about 400 points at this point as tensions escalate in West Asia. Dow in regular trading ended yesterday with a 300-point decline. The S&P 500 and the Nasdaq closed flat. Markets in Asia are tracking losses. The GIFT Nifty is indicating a gap-down start again for the Indian market. All right, very quickly diving a little deeper in those cues. $100 a barrel, we're back at that level, and that is the tipping point. Forget about anything else. It's the tipping point for India. Above $100 a barrel, things start to hurt at a macroeconomic level as well. Now, this is despite the fact that we've seen those 400 million barrels, additional barrels come into the market, which IEA is releasing. The problem, the reason why oil has climbed up back to 100 is that the war premium is very much on. 3 commercial vessels were hit by projectiles in the Strait of Hormuz on different accounts, on whether these were direct attacks, intentional, unintentional, doesn't matter. The fact is commercial vessels are getting hit in the Strait of Hormuz, and the US's promises of keeping the strait open and keeping it safe are completely falling flat on their face, at least right now. US markets, like we told you, ended mixed. Futures are indicating that Wall Street will start lower. It could be between 0.7% to about 1%, because all eyes are on the escalation that we're seeing in the attacks, in the violence, and the fact that Hormuz is simply not open. Bond yields are really reflecting that sentiment as well. US yields overnight, as a lot of this was happening, surged, and the gain was almost 7, 8, 9 basis points, depending on which paper you were looking at. So the 10-year yield has now moved back up to 4.22. The 30-year yield was gaining. The 2-year yield was also gaining. So the short end of the curve, the medium, long end, everything was up and about. And the reason why the bond prices are falling and yields are rising is that the market is very worried about inflation, with oil back at $100 a barrel. Speaking of inflation, we got data yesterday from the US. This is the US February consumer price data. And inflation is sticky. It's up 2.4% year on year. Core CPI is up 2.5%. And both of those numbers are above the Fed's comfort level, though they were along expectations. So it was not like a shocker. But the point is that inflation is sticky. And these are numbers, by the way, before we price in the oil shock. So the reality will strike in when we get the March data. Now, the risk-off means that the dollar index is back above the 99 mark. Asian markets are largely lower, as I see them on my screen right now. 1.5% down on the Nikkei. The Hong Kong market is lower by about 1%. GIFT Nifty is indicating that it will probably start down again about 100 points at least. And watch for currencies, with the dollar again climbing. Even yesterday, the rupee did end below 92. It fell again to that level of 92. And looking at the market right now, it'll probably open with some bit of weakness again at the start. And then let's see if there's any central bank intervention or not. The Nifty is in a slump. It's in a slam dunk. And I think the market was sensing some of this yesterday. Now, you can only argue that the Indian market actually fell ahead of some of the other global markets. We were down 1.5%. The Nifty slipped below 24,000. It's the first time this week we're seeing a close below 24,000. And it's practically a one-year low. The last time the index was below 24,000 was almost 1 year back, middle of April. And everything is down. Banks are leading the fall. NBFCs are weak, so we have to watch for this. And FPIs are constant sellers in this market. Yesterday in the cash market action, they sold off stocks worth about 667 crore rupees. Domestic institutions were buyers. They bought cash equities worth about 5,000 crores. And to all of this, remember, there's the added trade worry now, because the US, on expected lines, is launching a trade investigation under Section 301 into a number of countries, including India. But again, that's not a shock, because it was always coming. The Supreme Court in the US struck down Trump's original tariffs. So he's finding new ways and newer legislation to get back to the original levels. 15% has been declared, and now he'll probably look at other ways of increasing those tariffs levels. So trade continues to be a worry for the market as well. Where do we go this Thursday? That's the question. Chandan Taparia is joining us. He's Senior Vice President and Head of Derivatives and Technical Research at Motilal Oswal. And we have Aishwarya Dadich joining in, Founder and CIO of Fident Asset Management. Thank you so much, Aishwarya and Chandan, for joining in. Chandan, for all the bears out there, I mean, the party is still very much on. Oil is back at 100. And look at the way the market fell yesterday. So what to do today? Is this a no trade zone, or do you take short positions? What to do?
Good morning, Surabhi. Thanks for having me. So yes, the structure of the market is negative. Index has been making lower top, lower bottom on the weekly chart. We have noticed that every meaningful bounce is being sold and levels are shifting lower in the market. Just 2 days back, it bounced to 24,300, but again, yesterday it declined towards 23,850. And the way again VIX recovered to 21 marks, the VIX spiked by around 100% in the last 4 weeks, from 12.13 to 24. indicate that as of now the nervousness clearly visible in the market. And we believe that till Nifty doesn't negate the lower top, lower bottom on the weekly chart, immediate structure could be negative. So two type of stance will be there. First, on index, we need to apply the sell on bounce stance till Nifty holds below 24,200 marks. It can go down to retest the next meaningful support at 23,500 to 23,333 levels. Those who are looking to trade the index can also look for bear put spread or can use the sell on bounce stance. It would be very tough to go and buy put in this market scenario because premiums are high and a small the negative surge in the price can give the decay. So better to go with bear put spread, initiate sell on bounce kind of a strategy till Nifty holds below 24,200 marks.
Okay, so bear put spread, that's a derivative strategy you can use. Essentially look at selling the bounces. That's the call. We have lots of viewers actually this morning who are writing in pretty early. And Umesh was saying, good morning, Moneycontrol team. What is the Nifty rung we need to know today? This is especially for Chandan sir. I think Chandan sir has told you the Nifty rung is red and the trades are on the downside. Chandan, coming back to you, lots of other questions coming your way as well. Aishwarya is with us. Aishwarya, morning. Nothing's working, right? All the promises are hollow. We'll restart the Strait, the US Navy will escort vessels, and we're back at 100. And now 100 is not just a talking point for India. 100 is a very difficult reality for India. So what would you advise? This is the overall market-wide question now. Is this the time, would like today be the day where you go ahead and start making portfolio purchases? Or would you say that no, still keep the powder dry, wait a couple of days and then go in to buy the stocks that you like?
Good morning, Surabhi, and good morning to all the viewers. Tough day. If I have to, assess the situation in one line, I believe the war of oil has actually gone and changed to war of pricing of oil. I believe Iran has understood it very clearly that the one way they can hit the global large players is rising the crude prices. And if I see on the other side, US has been pretty vocal in trying to make sure that the crude prices doesn't go up. And why do I say so is obviously the biggest fear to US in the whole pack is their rising yields. Now we saw the inflation data yesterday that was more or less in line, but that's not important. What is important how the data looks like going ahead. And if the yield, which is currently at 423, 424, 10 year, if it inches by another 10, 15 bips, that will create a lot of pressure, given we all are aware about the debt situation of US and things like that. So I believe that is one area where Iran has understood and they possibly will do to make sure that crude prices stays high. So the volatility of crude over the last 7, 8, 10 days that we have seen, we will continue to see that thing going ahead also. It's very difficult to see how crude prices will go from here onwards. If you remember, 3.5 years back when Russia came out and said that, okay, this is a special operation, I'm doing it in Ukraine. And then the Russia operation is still going on for almost 3.5, 4 years now. But at that point of time, we saw Brent going as high as 130 before it's sliding back to a gradual level of 75 or 6 below. But I believe we will have to brace ourselves for volatility on the Brent side. I think Iran will not give up easily. And particularly for India, we know how it impact CAD, how it impact inflation, how impact of GDP. We are all hearing about gas thing. So for my only take to investor is just wait and watch out. I was expecting that things will stabilize by end of this month. And then possibly we'll see good level of market to enter into. But watch out is my word to all the investors there.
Sure, absolutely. I mean, this is pretty tough, no denying that, and we have to talk about all the sectoral level impacts as well. But before we get to that, Chandan, yesterday oil and gas stocks being volatile, one understands, but yesterday the backbone of the market, large banks and large NBFC stocks, they were getting sold like there's no tomorrow, right? I mean, 4-5% gone on Bajaj Finance, on Axis Bank, and a lot of these frontline names. What do you think is triggering this? What is the advice on banks and NBFCs now?
Yeah, so talking about BFSI segment or mainly the Bank Nifty, Bank Nifty was resilience for most part of the last couple of months. In fact, in the last year, the Bank Nifty gave the return of around 17 to 18% compared to 11% momentum of the Nifty on YTD basis. But now that momentum is getting fizzled out, In fact, the Bank Nifty has been making lower top, lower bottom from last 13 trading session. And after breaking the key support of 57,750, it corrected by more than 3,000 points in just 3 days. So that outperformance is now missing, and profit booking or liquidation of long position is happening in this entire index after the huge resilience in last couple of months. Now talking about the selective financials name, the structure is trending lower. In fact, the Bajaj Finance recovered well from 900 to 1050. But again, the recovery wiped out in just weakness of last 5-6 trading session. The similar kind of story in the Bajaj Finance as well. In fact, the counter like Axis Bank is making lower top, lower bottom. Kotak Bank has seen a massive correction in last 3 weeks. So structure is turning lower, and the heavyweights HDFC Bank is already making lower top, lower bottom. So as of now, the weakness in the Bank Nifty is the concern, and that's why the Nifty is pulling lower. Earlier, the Bank Nifty was resilience, but Nifty IT was turning the Nifty lower. But now the Bank Nifty joined the party of the bears, and that's why the concern is happening. So I believe it requires some more cool down or some corrective move happen before it gets settled. So as of now, look for slight long liquidation or look for some more weakness before we go for bottom out approach. But as of now, can buy the protective put or can go with slightly sell on bounce stance to use the 3 to 5% kind of decline in such most of the banking or financial name.
Yeah, absolutely. Aishwarya, coming on this massive decline in bank, I don't know, like Chandan is saying, maybe it's just finally people throwing in the towel and trying to lock wherever they have a little bit of profit left, because this was the only part of the market which was relatively better off. Is it that or something else? Because it's a little eerie, the manner in which, look at Bajaj Finance, these are yesterday's rates. I mean, the manner in which these stocks fell yesterday.
So I believe I think it's a mix of both. Obviously, what I heard is obviously there were some FIs who were extensively selling a lot of this BFSI counter on yesterday trading session. But there is another segment which believes that, if crude stays at more than 100 for at least a quarter or so, it will have an impact on the GDP growth rate, and as well as the ability of RBI to maneuver liquidity into the system. So that slowness in GDP can possibly derail the whole GDP credit growth, as well as the high quality numbers on an asset quality that we were witnessing, especially for NBFCs. So there might be a likelihood that we will see certain stress coming up in SME, MSME if the crude stays at this level, and they have an impact through slower GDP growth rate and higher inflation. And possibly they will see those numbers coming on their gross NPAs and net NPAs when higher provisioning in the coming quarters. So that is what we have to watch for, and that is what market got jittery about when crude started inching up. And possibly today might be also sees further pressure on BFSI on account of this. But having said that, this will only play out if we see crude stays above 100 for at least 3 months or so. Because if you really see the credit growth has been very strong lately. Numbers across operational parameters has been one of the best I have seen in the last 15-20 years. So we have a lot of, I would say, cushion to play out this thing. But if we see this crude coming back or some risk on sentiment coming back globally, BFSI can participate quickly back to the system.
Sure. By the way, we have lots of viewers speaking to us on the YouTube chat today, so I just want to take a couple of those comments. Narendra, good morning. Good morning to you as well. Narendra is asking, has that BlackRock and Blue Owl private credit effect added to the situation? Narendra, interesting point. You're clearly watching the markets very carefully. That's one more peripheral worry. Right now is peripheral. What's happening in the private credit market in the US. Right now, I mean, we can order the number of issues for the market. Number one is the war and the price of oil. Number two is what's happening in the private credit market in the US, and you're spot on. That is making people extremely nervous. And number three, obviously, trade. Trade continues to be extremely uncertain. Like I mentioned, the US president has launched this fresh investigation into EU, into China, into India, and a bunch of other countries to try and restore tariffs to wherever they were. So trade continues to be extremely uncertain. So it is a difficult market, no doubt. Then we have someone asking, Narendra is asking, shall I go for IRCTC as it doesn't depend on oil? There is Rupak who's asking whether it's a good time to enter QSR stocks like Eternal and Swiggy, or platform companies like Eternal and Swiggy. Now, Rupak, I must say that we don't know your time horizon. I'm assuming you're looking at a longer term investment. So, with that in mind, let me ask our experts. In the near term, obviously, Aishwarya, the whole noise around even restaurant companies, QSRs, or the platform companies that depend on restaurants, it's all very negative. We know what's happening with this whole gas situation. So, if there is panic, if these stocks fall, is this a great buying opportunity, or are you not convinced?
No, obviously this is unprecedented times, and we obviously are not very clear how the situation pans out. So obviously, yes, India is primarily was dependent on Qatar LNG and gas situation, and right now, as we speak, there is almost 25 to 30% shortage, and that's why we have seen majority of the sectors the allocation has gone from 100% to 70 to 80%, and there will definitely be a impact on volumes of majority of this, hotel chains, restaurants, many of these QSR and things like that. So I believe we are yet to see the true impact. There will be volatile situation. Investors should watch out if I think the ideal time for any investors to get into those stocks would be when they have clarity about situations improving. And you should be better off buying at 5-10% higher than buying and just staying open on that. And coming back to the quick commerce, the Eternals and the Swiggies of the world, there's one thing which, at least for the short term, I'm pretty worried about is how the competitive intensity is inching up. We all know that Amazon with Amazon now is just around the corner. And when they will come, they will hit very hard with all those aggressive promotions and things like that. And then the whole space, especially players like Eternal, Swiggies, and others, will face the heat. And we already have this risk of sentiment. So in short term, I might see that Eternal and Swiggy will see more pressure on the stock prices. But going ahead, we believe for long-term investors, this could be good buy, at least in the next month or so.
Got that. Okay. By the way, there are lots of questions coming for you, Chandan, on oil and gas stocks as well. So I'm going to come back with that. There's a viewer specifically asking for Reliance, so I'll request you to just get those charts out. In the meantime, here are a couple of stocks that you should keep on the radar. Obviously, oil and gas as a sector is going to be one of them. And a couple of stocks from the oil and gas space also make it to the newsmakers list. So let's tell you what the list is like. Mahanagar Gas, the company has said that gas supply has been curtailed by suppliers amidst global geopolitical developments. Reduced gas supply impacts industrial and commercial customers. MGL is not the only one. Borosil has said that OMCs have restricted supply of LPG due to a force majeure situation. Production at the company's borosilicate glass furnace has been temporarily suspended. The Opal glass furnace is operating as of now, but at lower capacities. There's news on Ashok Leyland as well this morning. It's launched a greenfield battery pack facility in Tamil Nadu. It's investing about 400 to 500 crore rupees in this facility, so watch out for this. Wipro was actually, at least in the first half of the day, was doing fairly well. And now the news is out. It has signed a multi-year deal with the True Stage Retirement Services. It will be looking at modernizing the IT architecture for True Stage. So that's positive for Wipro. Bharat Forge is the next one on our radar. Company's looking at investing 1,600 crore rupees in its arm Bharat Forge Global Holdings. So watch out for that. There's also KEC International. KEC is an interesting one. KEC has bagged a pretty large order. The value of that order is almost 1,500 crore rupees, 1,476 to be precise. This is for various T&D projects. Again, an order win, Vascon Engineering. Vascon has bagged an order worth about 116 crore rupees from the Ahmedabad Municipal Corporation for EPC work. So a couple of stocks that are in focus. But coming back to oil and gas, let's go over a couple of the more active stocks, Chandan. ONGC Oil India, because oil is at $100. Is there a long trade with ONGC and Oil India?
So, like Surabhi, we have seen a volatile cues in crude. In fact, just a couple of days back, it spiked by around 15-20%. But again, 2 days back, it corrected. And now again, it's going to recover well. So the volatility is clearly visible in the crude more than the oil marketing or oil stocks. If you look at the simple fundamental point of view, when crude is inching upwards, that should be benefited to the companies like ONGC and oil. But that is exactly not happening. If I look at the simple price behavior of the oil India and the crude, even at current juncture, the oil India is quoting near 480, and earlier also it was at the same. But yes, sentiment wise, it's positive. Some bullish bias. I believe the trend is positive until it holds above 255. Buy on decline could continue, and ONGC has potential to move towards 290 to 300 level. When I talk about Oil India, again has been consolidating with higher base. Multiple supports are visible near 460. With that support, it can head towards 520. Bias is positive, but I don't think there will be the direct correlation with the crude prices. So we need to keep that in mind before taking the trade.
Okay, all right. So the viewer was asking about Reliance Industries specifically. At least yesterday, Reliance was trying to hold up pretty well. Their refineries are really firing on all cylinders. And then Reliance is a much larger conglomerate. It's beyond oil and gas. Levels on RIL?
Yeah, so RIL has been making the range-bound bias, but trading below is 50-day exponential moving average from last 45 days. Yesterday, it would have gone to higher levels after the news update, but actually it was down by 1.3%. So it's going to be a very conditional trade if you're looking for intraday point of view or trading perspective. So as of now, it has support near 1350. If it moves above 1440, then only I see the major change in the trend. So it's going to be very conditional. Look at the key support and hurdle near 1430. Above that, only the bullish bias could be there in counter to start the next leg of rally.
Okay, so only buy above at least 1400 or 1430. That's on Reliance. Chandan, I want to draw your attention back to the banks actually, because the pre-open session has started. And in the pre-open, again, it's the banks which are the weakest. HDFC Bank in pre-open 4%, ICICI Bank 2.5%. Maybe these rates will settle. It's very early in the pre-open. Nifty is down about 180 points in the pre-open session. So these are stocks as Interglobe Aviation. Obviously, that's very weak for obvious reasons. Any trades on bank stocks or on Interglobe Aviation, Chandan?
Yeah, so Surabhi, we were quite positive in the bank Nifty earlier when it was continuing the sequence of high tops, high bottom, but that sequence has recently negated. And that is backfiring the relative strength of the bank Nifty to turn some more profit booking, because people are pulling their profit in the scenario when they are getting some profit in this segment compared to the losses in so many other sector. So I think that is the reason that it is turning lower, and most of the private banks are getting more hit. As I mentioned, that bank Nifty was having the multiple support near 57,750. And after breaking that, it corrected by more than 3,000 points. So I believe till bank Nifty holds below 56,250, it can go down towards 55,000 to 54,500. Talking about HDFC Bank, some more weakness could be seen towards 800 levels.
And there's a viewer asking for ICICI Bank as well. Any specific trade on ICICI Bank, Chandan? Any levels on that one?
I believe some sort of buying interest could be seen in this counter at lower levels. However, the structure is weak, but ICICI Bank has comparatively different nature. At the time of corrective move, it gets resilience or finds support at lower levels. So I believe one can accumulate at lower level. However, because of the market weakness, the stock may trade lower. But I believe one can apply the support near 1220, 1230 to accumulate the long position for a bounce towards 1350 for slightly 1 month to 2 months point of view.
Okay, that was quite a rapid fire for Chandan. Chandan, I know you have to leave us, but before you go, your top trades, as we are seeing the pre-open right now at about 4 minutes past 9 o'clock, it's 200 points down. That's the kind of gap down the pre-open is indicating. What to trade today?
Yeah, so I think you asked about Indigo, so let me reply on the Indigo here. The trend is weak and the counter has been making lower top, lower bottom. So looking for some weakness here. Till it remains below 4,500, it can go down towards 4,000 marks. If I need to find one counter from positive setup, then it will be Nifty Pharma, because it's better to be defensive in the defense scenario. So Nifty Pharma is comparatively doing well, and selective counter, whether we talk about Oro Pharma, Toran, Glenmark, has seen a consolidation breakout and turning upwards. So Oro Pharma could be one counter where we are recommending to go long with support of 1270. It can head towards 1350 levels.
Okay. All right, Chandan, thank you very much for taking all of those questions and answering a lot of those viewer queries as well. You have a good day, and we look forward to connecting again soon. Thank you.
Thank you so much.
All right. Aishwarya, you know what is up in the pre-open? I was looking for stocks that are actually up, and TTK Prestige Now guess what? Because there are so many reports of everybody rushing to buy these induction cookers and anything that can cook in an electric way, right? So TTK Prestige again in the pre-open is up 4.5%. I don't know if you look at the company, Stovecraft is up 4.5% as well. Any interest in these stocks or these companies?
Even Butterfly and Gandhi and all that players, which normally do stove or this thing where you can cook without gas. But I would say those investors who have been stuck into many of these companies for long is for them to get out of that many names. Many of these stock has actually haven't done much in the last 5-7 years, and you get this opportunity where you can basically come out of it, because the reason is this is temporary, right? It might stay for 1 month, 2 months, or 3 months, but we will see stability coming back. We have seen it many times before in the past. So my only thing is not getting excited about even if I've seen that in Amazon, if you go and order something, it's completely out of stock, it's sold out. And time and has taught us many times before that you basically sell in these kind of excitement and not be a buyer at a higher price, because it's not structural. The growth is not coming for the next 2, 3, 4, 5 years. So I would say investors to remain very, very cautious. Second thing is, obviously the gas supply is around 25% short, but I believe government is working around to make sure that it normalize in the coming weeks, at least 2 more weeks. So if that happens, things will start stably coming back to senses, and then again we will see that thing, normalizing on the stock prices also.
Okay. By the way, I just want to point out, in case viewers were wondering, there's right now a difference. It's pre-open sessions, all kinds of trades. There is a bit of a difference in the rates between the BSE and the NSE on TTK Prestige. On BSE, the stock is up 10% in pre-open. On NSE, it's up about 5-6%. So it will all, obviously it'll average out as we hit the opening session. So, that's one group of stocks that's seeing some traction. The refiners are obviously down, as you would imagine. So that's the BSE rate on TTK Prestige, and the stock's up about 10%. The refiners, oil refining companies, HPCL, IOCL, BPCL, as you would expect, all of them are lower by about 2 to 2.5%. Anyone who's not yet sold their OMC stock, Aishwarya, I don't know if such people are there in the market, but in case anyone has been holding on, waiting for a reversal, they would be looking at a significant loss. What would the advice be on city gas distribution stocks like MGL, IGL, and of course on the refiners?
Yeah, so I believe situation here looks pretty dark, especially when you look at MGL and IGL, and if you even include Gujarat Gas there, which has a higher proportion to industrial supply of gases. I believe we might be seeing more pressure coming on, because when you're looking at the EBITDA's number, there could be a decline of more than 30% to 50% for all of these three companies. And market will start factoring it more aggressively. So if situation doesn't improve anytime soon, we might see more pressure coming on this name. And coming to HPCL and BPCL, I'm very sure that there are not many investors there who have been stuck here. But I believe, there is obviously, if crude stays at 100, we will have an under recoveries of almost 20 to 30,000 crore on a monthly basis. And then there will always be a sword hanging on, whether we will see cut on excise duty and things like that. So situation is definitely not in anywhere near to a sunshine place. So I would ask investors to stay away because the situation of price of oil, so we can stay higher at least for a month or so, and then the stock can see major de-rating following that.
Okay, all right, got that. So one needs to be cautious because these are real prices and real losses if crude continues to stay where it is right now. Aishwarya, thank you very much. Good conversation, very helpful for our viewers as well. You have a great day and we'll connect again soon. Thank you.
Thank you.
All right. Well, with that, now the pre-open session has settled. It's still a 200-point drop, 192 points lower on the Nifty, and look at the Bank Nifty. That one's collapsing. Bank Nifty down 1.3% in the pre-open session, leading the declines. Our next guest on the show is joining in. Maulik Patel, Head of Research at Aquarius Securities, is with us. Maulik, good morning. Thank you so much for being here. Oil is back at $100 a barrel. and people are wondering what to do. And bank stocks are falling far more than oil and gas stocks now. So it's a perfect storm in the market. Let's actually start with the oil and gas ecosystem first, because that's again, a big negative headline today.
Yeah, good morning. Yes, oil is in triple digit. You know what's happening on a geopolitical. There is a real crisis in terms of securing the cargoes, the inventory. Despite that, IEA announced of 400 million barrels of oil reserves, which obviously will take a lot of time to come. It will not come in a week or a month. Some estimates suggest that it will take approximately 90 to 120 days for that 400 million barrels of oil to come in the market. Now, if you take some mass out, this is the Strait of Hormuz was doing some 20 mbpd of oil passing through that choke point every day. Some of this has been now sent over to the west coast in Saudi Arabia towards Red Sea. Some UAE can do that towards the Gulf of Oman. But still there is another 13 to 14 million barrels per day of oil which is not passing. And this 400 million barrels is, in a way, is approximately 3 or 30 days kind of an issue. However, there is the inventories across the major countries, particularly in emerging countries, is at a very low level. So that's what reflecting into this price. Now, how long this crisis lasts, I think it's anyone's guess. But more the crisis lasts, the more the oil price will go, and that's what. And historically, the oil price in this situation is much dramatic, much serious than in the past any situations. So the oil price in any crisis goes at least 25% up to the 300%, right? And now we are today we are at 50% up than the pre-crisis level. So there is a still long way to go.
So the question, no, absolutely, Maulik, the question is that if I see the oil refining stocks, and even if I see gas stocks, I mean, they're down anywhere between 10% and 20%. So have they priced in the losses that we are currently looking at? Is there, I mean, my question is simple. Is there any sense in looking at a buy at this point in time that, okay, this is a bad environment, but this is when you buy a decent oil and gas stock for the medium to long term? Or are we not at that point yet?
I think, see, particularly you have a three different bucket. One is an OMC. Second is the refining companies like Reliance, BPCL, sorry, this MRPL and CPCL. And third is an gas companies. And obviously there's an upstream companies which are beneficial, so we'll leave it out. On OMC sides, they are making a good money on the refining side, because the refining delta has been like massively up in the last couple of days. But they're making massive losses on the marketing side. Now, in OMCs, the key concern has been that government is not willing to raise the retail price. Now, retail price is flat for the last 3 to 4 years now. And if they do not do that, then the losses will accelerate. Now, in this case, particularly OMCs, given that they are on a very relatively thin margin, right, the losses become very large and you have to pile up the debt. The story which was playing it out over the last 6-9 months before this price moved up, that there's a massive deleveraging which is taking place in a HPCL, IOCL, BPCL because of the strong profitability they were enjoying it. Plus, government has given them this 30,000 crore rupees of LPG under recovery of the past years. So there was a massive deleveraging, and that's when stocks were running up. Now that story is completely gone. You will see a significant debt may pile up.
Maulik, sorry, I'm cutting in over there because the market has just opened. Just give me a second. I'll go through the rates and then we'll complete the point that you were making. The market has opened with a 250 point cut. So it's a little more than what the pre-open session was indicating, 260, 70. This is where things are at this juncture. And once again, the bank Nifty is falling more than the Nifty. So bank stocks have become the latest targets of the bear cartel, if I could call it that. and they are really the ones that are taking things lower. So let's see the Nifty losers tally. ICICI Bank 2.5%. There's L&T. Interglobe Aviation is falling quite a bit because oil at 100 just completely changes the reality for airline operations, and therefore that stock's down another 3% today. Interglobe has lost 13% so far in March since the war began. So that's the kind of price damage that we've seen. Eternal is lower by about 2%. We'll pull up Swiggy as well in just a bit because a lot of these platform companies, now there are real concerns. Restaurant associations are saying that we don't have enough gas and we might have to hike prices or curtail production. So it's really, some of it is panic, some of it is reality, but it's all very, very confusing and very hazy. Tata Motors 2% lower, Bajaj Auto is down, Kotak Mahindra Bank, Shriram Finance, it's across the board, Geo Financial. So there's auto down, there's financials down, there's aviation down, L&T, which obviously has a significant West Asia exposure, that stock is also lower. SBI, Axis Bank, HDFC Bank, all of the bank stocks are down between 1 and 2%. Actually on the Nifty, tell you what, not a single stock is managing even a 0.5% gain. It's that kind of a gap down opening, including ONGC. ONGC is not even up 0.5%. Look at the Nifty winners now. Let's flip this over and show you Nifty winners. There's hardly anything to count. ONGC is not even up 1 rupee, 1 whole rupee. And that is the extent of nervousness in the market. Coal India, again, 60 paise. There's some, there's HCL Tech and TCS, some of the tech names, IT names are at the border, trying to now break into positive territory. Let's see. Reliance is about 0.5% lower, again, trying to break into the positive territory, but not quite successful, at least at this juncture. And the mid-cap market is now really, really sliding. When we had that pullback day, it was Tuesday, I believe, the mid-cap market started doing really well. Even yesterday, up until a point, the mid-caps were doing better than the large caps, but that's not happening this morning. Mid-cap index almost 2% lower. Let me look at some of the losers. Okay, so IOC, HPCL, BPCL, MRPL, all the refiners are down 3, 4, 5%. Some of them are on your screen. Fact, the fertilizer stock had rallied almost 15-16% of the last 2 sessions. Today it's giving up a lot of those gains. Astral, you can see, is down about 6%. Hexaware is lower by about 4%. RCF, another fertilizer name, down about 3.5%. So, it's just across the board. It's everywhere. WeWork India is down 4%. Aether is down 5.5%. It's all over the place, literally. That's what I can say. What is on the upside is Adani Total Gas. Adani is up 13% right now, Adani Total Gas. TTK Prestige, look at the stock, the cookware maker, the induction cookware maker, 12.5% up. Bajaj Electric is up 3%. So anyone who's making appliances which can be driven by electricity and you can, make some food, those companies are up. Stovecraft, 8% higher. That's really the only uptrade, so to speak, in the market. HOEC, which benefits from oil prices, higher oil prices, is up about 5.5% as well. That is the market, at least at this point in time. There are companies like Borosil. Borosil declared that one of their plants has had to shut down. There's no gas. Stock's down 5.5%. A lot of the QSRs, our reviewers were asking if it's a good time to be investing into QSRs for the long term. Well, right now the dip is pretty severe. Jubilant Food is down 3.5%. Westside Food is down about 3% as well. Sapphire is down about 4%. So yeah, it's all over the place really. And a lot of it is red. The Nifty now staring at a 300-point drop. It's a tough morning. 23,570. We're moving further and further away from the 24,000 mark. This is real. Before I go back to our guests, I just want to look at the price of oil. It's really about that and really nothing else. And I can still see 100 on the screen on Brent. Let's fire up oil prices. That's the Nifty, down 300 points. And Brent oil prices at this juncture, almost 101. So yeah, the situation has not really changed. Maulik, quite a few of our viewers are asking us on YouTube, is there any stock, any sector that doesn't get impacted because of oil and gas? Please tell us, what can we buy in this market? That question to you.
I think if you look at larger market, somewhere there is always an analogy. It's all about energy, right? And in our energy mix, the oil is the largest one. So there is always going to be some impact to that. You take it from the auto to FMCG to anywhere. Only sector which probably may not be impacted is an IT at a certain extent, or the telecom. But other than that, I think large part of the corporates will be impacted. And I can give you, and see what, as an investors, we know that there can be a first derivative, second derivative, or third derivative impact. But like what you mentioned about TTK Prestige, right? That's what fifth, sixth derivative, and you do not have an oil, so there's an LPG shortage. LPG shortage is there, so people are not able to get an food from the Zomatos or the Swiggies, and then you need an inductions, this electric induction. That's a fourth degree impact of this oil. So you will see so many cases in next 1 month where we as investors do not know that what can be actually, because the world is so interlinked. There are so much complex supply chain system which is now getting at a verge of breaking. And it is as bad as the situation one could think about in the last 4 or 5 years, other than the COVID period. And will take some time to manifest, to see the things where are going to hurt. Now, I give you a classic example is that auto companies. Auto companies use paint, like paint shop. The most of the paint shop runs on the required to heat the paint shop, either on an LPG or the gas. Now, if government is not giving them an industrial gas, how can this paint shop can run?
Sure.
Then you will see an impact on auto production.
Sure. Sure.
Now, so you have a whole cascading chain which is working out.
Sure. All right. So nothing on your buying radar, Maulik?
Oh, probably IT looks only the one which can be buy. I think despite, and because of already they got corrected a lot in the previous couple of weeks because of this AI. You have some kind of a safety. Pharma is one where definitely one can look at it. Partly because of you do not have that risk of as of now, given that the cross margins are very, very high, and you still do not have so much of a disruption. So where people will find in a safety is another pharma and IT today.
Sure. Okay, all right. I guess those are the two sectors that at least, right now we can say they're not being touched by the higher price of oil and the lack of gas availability. Otherwise, it's tough times. Maulik, thank you very much for joining in and giving us context on oil and gas specifically today.
Yeah.
You have a good session and we'll catch up again soon. Thank you very much. Okay. Yeah. By the way, let's welcome in our next guest on the show. And as we do that, we'll also put out a lot of the brokerage views that are coming in, specifically on city gas distribution stocks and oil and gas stocks, because that's really where the focus lies. Gautam Trivedi, managing partner of Nepean Capital, is with us now. Gautam, good morning. Thank you so much for joining us. First time that you and I are chatting on Money Control. I'm glad you're here.
Yeah, nice to see you here. I was a little surprised when I heard that you'd moved here, but I'm sure it's been a great move. So yeah, thank you for having me on your show.
Yeah, Gautam, it's all about reaching everybody on YouTube now. That's where the action is, right? And that's where media seems to be heading. So I thought, okay, time to experiment. So we'll see. We'll see how it's going. And, viewers are very interactive on Money Control. And that's what I was just alluding to. One of the viewers was just saying that what is going on, even if we want to buy something for our portfolios, I mean, almost every sector is getting in some way impacted by higher gas prices or lack of availability of gas or oil or inflation. So is there any holy grail in the Indian market at this point? Let's start right there with that question.
Yeah, I think that's the question you just asked, Maulik. He kind of struggled with that answer, but he came up with IT. So, here's my 2 cents. On IT, let's talk about IT, and I don't want to necessarily address what he said, but I just, I'm glad he brought it up because I have a view on IT, which is something obviously that I want to share. That from an IT perspective, you've seen the last 1 year, 3 years, 5 years, huge underperformance. In fact, I read an article recently, which I didn't realize had happened, that TCS had lost almost 100 billion in market cap over the past 5 years. So that's been the value, erosion, unfortunately, that's happened for this entire sector. So, and that's only one company, i.e. TCS. But the point I'm trying to make is something else. The point is that how is Indian IT going to leverage AI? How is it going to be impacted by AI? What are the opportunities AI is going to create for them? And more importantly, will they need lesser of a headcount? So for example, if TCS employs 450,000 people, will they need half of that or 25% of that? So will the retrenchment make these companies more efficient and hence improve their margins? I don't know about revenues necessarily, because a lot of the revenue seems to be going the AI way, but it's really a black box as of now. So the good news is valuations have corrected meaningfully. They used to trade anywhere from 25 to 27 times 1 year forward earnings. They're now at about 16 to 17 times, in some cases even lower. So is IT interesting? The answer is, from an absolute valuation perspective, answers that's coming out is yes. Would I nibble in yet? The answer is no. But to your question about what to still buy in this market, my personal view is still look at data centers and the entire ecosystem around it, which includes power, of course. In our case, in our fund, power has become the second highest allocation after banking and finance. And that's because there's no direct way to play data centers and AI today in India. And I think the fuel that is going to power both the data centers and AI onwards is electricity. So we're playing that. So my view is that doesn't get impacted necessarily. I don't mean so much generation, but on the distribution side, and the entire ecosystem within power has got multiple smaller companies that are supplying components into the power industry, and those are very, very exciting even now.
I'm glad. It's refreshing. We're talking about something long-term, something where you can still build portfolios and wealth. So it's a breath of fresh air, Gautam. So I'm parking the oil and gas conversation for a little later. Let's focus on this. Yeah. Data centers and playing that through power. So if you could elaborate on that, and I know you won't get into maybe individual stocks. If you can, please tell us what really stands out as a data center play. Should you be in generators? Should you be in companies that are making power equipment, these big MNCs? Should you be in the grid guys, something like Power Grid? Because it's a very large ecosystem. It's a large value chain.
Yeah. So, here's what I would say. I would say all of the above, and valuations notwithstanding. So, for example, if you look at some of the MNC transformer companies, valuations are, from a global perspective, extremely expensive. But look at the growth. And literally 80 to 90% growth rates quarter after quarter, year-on-year growth rates every quarter. So my point is that let's understand the AI ecosystem and what's powering it in the first place. And I don't mean power as in electricity power, what's driving it. Now, if you look at India as a market, we've got over 800 million smartphones riding on 4G and 5G networks. We have now over 250 million 5G mobile subscribers. Think of the ability of these individuals to make short reels, to make videos and upload them on social media. Now, all of that social media is sitting right now in a server in either California or Arizona. And the government of India, rightly so, is asking all of the big cloud companies to port that data of Indian citizens in India and not have it sitting offshore. And again, totally get that. But there isn't enough data center capacity today. So that's the reason we're going from just over 1 gigawatt of data center capacity to about 9 by 2030. And if you've heard all the headlines about the billions of dollars that are coming into this country, two of the biggest groups, i.e. Ambani's and Adani's, have made huge commitment. So that, I think, is going to be a multi-decadal story. Not just, as I said, data centers, but even electricity, i.e. power. And do keep one thing in mind. India produces 20% of the world's data, but has only 2% of the world's compute capacity. So that's the reason I'm so positive. One more angle into the entire AI data center fact. ChatGPT, Perplexity, Gemini Pro, all of these have been given to Indian citizens, Indian residents for free for the first 12 to 18 months. So you're getting people hooked on to AI, and people start paying for it once you get used to it. So my point really is that the data center revolution and the AI revolution that's coming in this country is going to be massive. It's going to be hugely beneficial, but you need electricity to power all this.
Yeah, and I completely take your point. I think right now, till it plays out and we have more, say, native AI companies in the country listing, I think power is
Yeah.
just a great way of playing. It completely makes sense. It's very logical and easy to understand as well now that you explain it so well. I want to move now to the second biggest part of your portfolio, Gautam, and you said that's financials. And that's where people are really hurting, because as of now, it was an oil and gas problem in the market, and it was, upstream, downstream, refining, some of the gas producers. But the way in which large banks, large NBFC stocks have started falling in the last 4-5 sessions, what is that telling you?
That clearly tells you that there is a lack of confidence with respect to the ability of the borrowers to pay back money. And, industrial or corporate loan growth has been tepid, but everyone and their mothers seems to be focusing, both the banks and the NBFCs, on the retail segment. So there are multiple reasons why I think retail basically is under threat. Of course, AI being a prime example. Real estate stocks, if you've noticed, not just banks, but even real estate stocks over the past 12 to 15 months are down anywhere from 20 to 25%. Why? Because the fear is that AI will result in job losses, which means people won't be able to buy apartments, won't be able to rent apartments. So these are real issues, and obviously not being able to pay back their loans. So these are issues and concerns that AI alone has brought in. So, how this pans out and frankly, what's going to be the solution to AI-related job losses, I don't know the answer yet.
But I'm glad you brought that up. And I think, okay, so twin concerns maybe. One is AI, job losses, and what happens to retail credit. And I don't know right now if there's some semblance of uncertainty creeping in the market. Always discounts the future and also gets very negative, very bearish, ahead of reality at times, on whether there is a fear building up that there could be some sort of corporate credit issues also picking up, because companies are announcing force majeures. There is no gas, plants are being shut down. We just heard Borosil say that overnight. So is there an element of that concern, corporate credit concern, that's also showing up in bank and NBFC stock prices now?
The answer is a function of how long this war is going to last. If this war goes on for another, I hope it never happens, but let's say another 2 months, we've got a real problem. India will become collateral damage to a war that we are not involved in, but it's impacting all countries that are net importers of oil and gas. I mean, it literally boils down to that. And the impact of oil and gas is across so many industries: autos, tires, paints, plastics, polyester, fertilizers, aviation, chemicals, and of course, hospitality. By the way, I was reading an article in the India Today, which said and I'll try and find it right here. It says how is it that price of oil is impacting weddings in places as far as Rajasthan. So, hotels really are having a problem. I mean, once the guests arrive, how are you going to cook food for them? You can't chop trees or burn coal. They both are highly polluting and environmentally unfriendly.
Yeah, I mean, the realities are now hitting home. The reality is hitting home when you have local restaurants saying they're either going to increase the pricing, or there'll be curtailment and shutdown, and you just never thought. I mean, when the war started, I don't think anyone was making those links. But we now realize how real all of this is, even though the government has been promising quick action. We had a press briefing yesterday, and the government is assuring supplies to all the priority sectors. But even then, these concerns are indeed playing out. So, okay, that now brings me to the central question, Gautam. Oil at $100 a barrel. I was speaking to Soumyakanti Ghosh of State Bank of India just a couple of days back, and he said that is a very clear pivot. Above 100, we have a problem. Below 100, 80, 90, we can manage. I mean, from an economic standpoint.
Sure.
Now, if 100 stays on the screen, 90 to 100 stays on the screen for a while, has the market priced that in? Or will we need to head lower to price in the actual pain?
Here's the unfortunate part. If you look at the month of February, and again, I'm going to go back to that for a minute, because there was a great month from a macro and a stock market perspective, because we had the announcement of the India-EU trade deal, the announcement of the India-US trade deal, and the immediate lift, which led to the immediate lifting of the additional 25% tariff. We had FPIs investing investing $2.4 billion in that month, the third highest
It
in
felt
that
like a
month.
record, Gautam. It felt like a record.
It felt like a record because
You
it
know,
was a
after
positive
15
number.
months of non-stop selling, it felt like a
That's
record.
right.
It was like, oh, yeah, wow, there's
So
actual positive money in February. So I know what you
exactly.
mean.
The word record just naturally came out, and I'm probably incorrect, but anyway. And then of course better than expected third quarter results. The season ended in the middle of February, so everything was going right until this war happened. So
Yeah.
I don't think this was priced in. I
Yeah.
don't think anybody would have priced in lack of availability of LNG. And of course, the price of oil hovering at 100, or even it briefly went to 122 early in the week. So my view is, but do keep one thing in mind: at $100, we're up 65% from the start of the year, the price of oil. And the price of oil has accelerated the increase only in the past 10 days. But even before that, we were up almost 45% year to date. So before the start of the war, oil had already started moving up. So you're right. A lot of people did not connect the dots on what sectors and industries could be impacted, not just hospitality and restaurants, but the whole banking system, which clearly is getting impacted as well.
Yeah. Gautam, finally, so then what is to be done now? And again, I'm asking that question again, that if oil stays between 90 and 100, first of all, two-part question. First of all, how much lower for this market to price in that reality? And then what to do if this sustains for the next couple of weeks? Should we invest, not invest? Where to go? Keep the powder dry? Look at other asset classes? What should investors do?
Yeah, so both are very valid questions, Surabhi, and my point is that it's a very hard call to make, not knowing when the end game is for this war, and will it prolong? You've seen wars in the past. Ukraine, Russia's into its fourth year. Gaza pounding is still going on. I'm not political pundit, but looks like this isn't going to end soon. So in that environment, I think sitting on cash is a great idea, and waiting for the right opportunity to come in. If you find stocks that are hitting your price points that you would have bought them at, some of the EMS companies have corrected 55%. If you think at these prices they're looking attractive, start nibbling, because you can never time the bottom. Can they go down another 10-15%? Potentially, the answer is yes. But like I said, don't try to time the bottom. Try to find a point at which you think you're comfortable buying the stock in terms of valuation and growth. So that's what I would do. And it's not like the whole of India is going to come to a grinding halt. There will be pockets, like I said, for example, power, AI, data centers will definitely benefit. I think this would be a great time to start looking at the hospitality sector. A lot of the stocks have had a major correction. We're tracking that sector as well. And at the right time, we will actually start putting money to work in that space.
Okay, all right. So that's two ideas Gautam has given us: data centers, and you can play that via the power space, and hospitality. Right. So that's where you'll eventually start adding positions, and you're studying IT. You mentioned not buying right now, but studying.
That's right.
Have you taken the money off in any parts of the portfolio? Not necessarily in the last 2-3 days, but in general. Have you lightened positions? And in terms of cash, Gautam, how much cash are you sitting on at Naples?
Yeah, we're sitting about 8% cash right now. Wish we would have been in a higher number, but that's where we are right now in terms of cash.
Okay, all right. So that I think is a very prudent strategy, and one that makes perfect sense to us in terms of just how to deal with this market. It's not a market that's giving us all the answers in a single day, for sure. Fantastic conversation, Gautam. Thank you so much. Great one, and I hope it's the first of many. Very, very helpful context for our viewers. Thank you. You have a great rest of Thursday. Have a fantastic weekend, and I hope. Thank you so much, and I hope we're seeing you on the Moneycontrol Global Wealth Summit. Let me make this an on-air invite, and then I'll follow it up. I'll call you after the show, and I hope you can make it on Saturday. We'd love to see you in person as well. Thank you so much. Have a fantastic day. Thank you for joining.
You too. Bye-bye.
All right. Bye-bye. Thanks. Okay, so that is a word from Gautam Trivedi, and let's just see what's happened to the market in the meantime. Actually, nothing. Market is still down about 300 points. The mid-cap index is down about 1,000 points. It's falling more than the Nifty, and the Bank Nifty is down about 800 points, translating into a cut of about 1.5%. It's a tough morning. Let's actually just do a little bit of market check before we introduce our next guest. That's the Nifty 50. No recovery. The market is still digesting this reality of Brent oil back at 100. Fire up the Nifty losers now. Look at Eternal. Eternal has fallen so much. 214. Eternal is down 13-14% in March. The price now is 214. That's your Zomato. Nifty losers. Let's just get Nifty losers on the screen because all these stocks will then come up for you. Eternal, M&M is down quite a bit. 3% lower on Mahindra and Mahindra. M&M has also lost about 9-10%. Now M&M's one-year gain has reduced to just about 15%. So it seems that wherever there are profits, this is a market where people are also rushing to book their profits because there is so much of uncertainty, nervousness around how long this war really lasts. And Eternal is a case in point on that. Tata Motors is down 3% today. Interglobe is down 3%. And Shriram Finance is the other one that's losing quite a bit. The market has come back down to a one-year low. That's where the Nifty is at. The last time we were at these levels of close to 23,500, 23,600 it was back in April of 2025. That's when Liberation Day tariffs were announced and the market was really sliding. So we're back there, middle of April, 14th April to be more specific. And that's where we are at. So wide list of losers today. I just want to talk about some losers from the mid-cap market as well. Bharat Forge, 4%. Look at IndusInd Bank, 4%. Astral, we highlighted earlier, 4%. Hexaware, 5.5%. Tejas Networks, 4%. Lemon Tree Hotels, 4%. A lot of fertilizer names like RCF, in fact. All of them, yesterday they got excited because the government has made fertilizers a key priority sector and it's ensuring at least 70% of gas availability. So the stocks rallied quite a bit, but now it's all coming off. All the gains are coming off. So keep your eye on what's happening in the mid-cap market. Adani stocks, by the way, are bucking the trend. Adani Power is up 4% and Adani Total Gas is up 13%. Gujarat Gas is up now 9%. GSPL is up about 7.5%. Now, some of these moves don't have immediate explanations, but that's the nature of this market right now. Suddenly, gas stocks are spiking higher. The government has promised that there are 2 additional gas cargoes coming. So maybe there's some of that hope that's playing out. But literally, it's extremely confusing at this juncture in the market. Down about 260 points on the Nifty. Well, our next guest will be focusing on the oil and gas space in totality. We'll have Dhaval Popat, energy analyst at Choice Institutional Equities, joining in. Before I invite Dhaval into the conversation, it's important. Dhaval, hi, morning, great to have you in. Before we get started, Dhaval, I just wanted viewers to have context in terms of in terms of what all the government has been doing. Yesterday, there was a press conference again by the various ministries, including the Ministry of Petroleum and Natural Gas. And officials are talking about the steps the government is taking. The government has, ironed out a couple of priority sectors, LPG, CNG, fertilizer. And yesterday, Ms. Sujata Sharma from the ministry addressed concerns around hoarding and LPG shortages. Here's what she said. Listen to her, then we come back and talk oil and gas in detail.
Let me also address the report of panic booking. Feedback suggests that some panic booking and hoarding behavior has been triggered by misinformation. इसके बारे में मैं ये कहना चाहूँगी कि हमारा जो normal delivery cycle है for domestic LPG, it remains around 2.5 days. So अगर आप सिलेंडर बुक कर रहे हैं तो 2.5 दिन के अंदर आपको सिलेंडर की आपूर्ति होगी. As a temporary demand management measure, the minimum gap between LPG booking has been increased from 21 days to 25 days. At field level, OMC officers and anti-adulteration cell are coordinating enforcement to clear distributor backlog and ensure smooth delivery. अंत में मैं ये कहना चाहूंगी कि ये एक वैश्विक चुनौतीपूर्ण स्थिति है, लेकिन भारत की ईंधन आपूर्ति नियंत्रण में है। सरकार स्थिति पर लगातार नजर रख रही है और घरों और प्राथमिकता वाले क्षेत्रों की सुरक्षा के लिए आवश्यक कदम उठा रही है। हम नागरिकों से आग्रह करते हैं कि वे घबराकर बुकिंग करने से बचें, अधिकारियों के साथ सहयोग करें और वैश्विक अनिश्चितता की इस अवधि के दौरान जहां संभव हो ईंधन का संरक्षण करें।
Okay, all right. So that was, the officials from the Ministry of Petroleum and Natural Gas talking about the steps that India is taking. And Ms. Sharma also mentioned that India is now sourcing oil from over 40 countries. And she spoke about how more cargoes are on their way. In fact, there are reports indicating that India is also trying to get more oil through the pipeline network to bypass the Strait of Hormuz. Of course, it's complicated. You can't transmit too much oil through the pipelines right now, the East-West pipeline that runs in the Gulf, but those efforts are still very much on. So with that, let me now go back to Dhaval. Dhaval, morning. It's a morning where we're looking at $100 again on the screen. How bad? First of all, how bad is it for the marketing companies? I mean, how deep will the losses run now?
So thank you for having me on the show. And yes, it has been completely volatile. Where we saw about $120 per barrel on Monday morning, then back to almost 80s, and now we are back to 100. So as my view or Choice Institutional Equities view, what we have is that we estimate the Brent to be at $66 per barrel on average for this year. And our bull case, what we see right now is that it will go all the way to up to $130 per barrel by the end of next week, provided there is the status quo on the Strait of Hormuz sustains. Now, this is bakes into certain factors that we see, particularly what is happening currently in the market, right? So currently, if you see 16.5 million barrels per day is not being moved out. That's just the oil that used to transmit to Strait of Hormuz, not just looking at the refined products. But out of those, if we remove the pipeline, that is about 3 million barrels per day, about 2 million barrels per day at rate at which the IEA may discharge its reserves overall. And of course, about Russian barrels taking in about another 1.5 to 2 million barrels per day. In all, 10 million barrels per day of deficit is what we see in the market. But we have divided this graph, or particularly the trajectory of oil price, into three sections primarily. So below $90 per barrel is more of a supply shock, where we see from $190 to $130 per barrel. That is more of precautionary demand, or where hoarding takes place. So what happens is that, as I just explained, that just about 10 million barrels per day is what the deficit looks like on the physical basis. But the refiners would not just store it for today, but for the upcoming day as well. So India does have certain level of reserves, but there are countries where they do not have reserves and they would hold more. So this hoarding premium starts to kick in as soon as there is a non-availability of the supply. And on top of it, there is about 6.5 MBT of production could already announced. So this premium that we are seeing in the market currently has started to come up again, wherein the hoarding premium is into effect. And post $130 per barrel is where we see the scarcity premium, or where the actual demand destruction starts to happen. So in our view, about 20 million barrels per day is something that needs to be knocked off in terms of the demand destruction, so as to balance this market. So that's my view on oil particularly. Now, coming to the question that you asked on particularly on OMCs, yes, the marketing margins are already negative at these levels. That is an easy saying. Everybody knows about it. However, not just the OMCs, but I'm pretty positive on the pure play refiners right now. I can get into more on the refining bit of it, or do you want me to get into the other parts of the segment?
Yeah, Dhaval. No, so Dhaval, just taking it step by step. So first of all, now we're working with obviously assumptions here. So if assuming that the war lasts another couple of weeks and Hormuz does not open meaningfully, at least. I mean, yesterday they shot 3 ships that were somewhere around that vicinity. So if things remain at status quo, then do you expect the price to remain at 100? or would it be heading higher because of the hoarding premium? Let's just clarify that first.
So if the status quo remains, if there is no passage of through the Strait of Hormuz, along with there are no talks of negotiations in place by US, Israel, and Iran, we expect the oil price to reach $130 per barrel by the end of next week, or to be precise, by 20th of March.
Oof. Wow, $130 a barrel by the end of next week, if nothing changes. Yeah, okay, got that, noted that. Let's hope there's some de-escalation. Let's hope some sense prevails. But okay, that's a working scenario going on status quo. So now I want to talk about the refining part. You said, of course, for oil marketing companies, their marketing margins are anyway negative. They're all making losses because pump prices haven't gone up, at least on petrol and diesel. But what happens to refiners in an environment like this where oil prices are surging and refineries, for instance, in India are being told to work at complete 100% capacity to bring out more LPG, etc., or to bring out more of the petroleum products? What happens to refining margins in this environment?
Yeah,
global and Indian.
Yeah, definitely. So if you look at the pure play refiners in India primarily, right? So right now what we see is that the diesel cracks as well as the gasoline cracks, ATF, all of them have shot through the roof. And the primary reason being that the diesel prices, even if you see these are, if you just look at the international FOB prices that PPAC is reflecting, it is already up more than 50%, whereas the Brent is just about 30% odd higher from what we can see from the February levels. So once you have this in place, this definitely reflects a very strong refining margins for the quarter. And one point that I would like to add is that what the insight is that post 2022, what has happened once the Russian flows have stopped to Europe, particularly of the refined products. As soon as the Brent spikes, the spike in diesel or the refined products is much more greater, resulting in a stronger refining margin. So this point is not by and large discussed by the market, but till the time and now since January 21, 2026, wherein Europe does not take into the refined products which have been distilled from the Russian barrels, this even tightens the market more. And overall, and one more factor that is really causing this diesel cracks to jump even higher while the Brent rises is primarily because China has also restricted, not just now is that there is an export ban right now, but Chinese teapot refineries, which dumped its surplus into the Asian market in 2024, which led to the negative cracks, has also stopped, or there is a cap that the Chinese government has already put in place. So all the teapot refiners are more or less being replaced by the petrochemical complexes, and there is a cap as well. So in such a scenario, we as a Choice Institutional Equities, we have a positive view, particularly on refining in the downstream segment of the business.
You know, what's amazing is we should pull up some of the stock prices now. The oil and gas index is actually positive today in a market that's otherwise down 1%. Oil and gas index is up 0.25%, and that's largely thanks to the kind of gains we're seeing in some of these gas stocks. Like I said, Gujarat Gas, a couple of other names as well, all up and about. Adani Total Gas, a couple of them are higher. Dhaval, finally, what is the advice to Indian equity investors? It's been extremely confusing. First, one thought that playing, something like ONGC or Oil India, the upstream guys, that's a clear-cut trade. But now that's not working as clearly anymore. The gas people have announced force majeure, so you don't know what to do with those stocks. What is the advice to Indian investors when it comes to equity within the oil and gas realm?
Yeah, so given I have limited coverage as of now, but as I said, I'm positive on pure play refiners. And while you see today the MRPL is already down, I understand I'm personally positive on first, of course, on MRPL, a very good company, a good Nelson Complexity Index, not just in terms of complexity, but also the arbitrage that they do in the intermediaries that they are able to do. Wherein right now they might just not take in the crude, but they may also take in the HSFO or the high sulfur fuel oil, which is again up about 40%. But they would utilize the secondary processes and get the GRMs higher. So MRPL, a very good stock, a really good company. Second, of course, though the most of the refiners are moving towards the petrochemical complexes, the optionality with MRPL also lies in the fact that they are moving towards a pharmaceutical grade, which of course has greater margins to what we see in diesel and gasoline. And that is a standout from what the other refiners are currently doing. Next, of course, I'm also positive on CPCL, but there, of course, the petrochemical overhang lies by 2030. So my take, or I'm quite positive as of now, what I see in the market and diesel price, I'm quite positive on pure play refiners. That's where the one should be investing right now.
Okay, and last question. So refiners, Dhaval, thank you. That's very, very helpful. You've explained why you're positive on refiners. Within that, the sort of companies that perhaps stand out. Final question, Dhaval, on gas. Because for India, that's the bigger issue, right? Oil we can still buy from here and there, and we'll get some from Russia. But half of our gas supplies are choked. And all the companies have declared force majeures in the chain. What could the next couple of days bring? And what would the advice be on this section of stocks? Whether the regasification players or GAIL, which operates the grid, or the city gas distribution stocks, what about India's gas chain?
So particularly if I look at the price movement that has happened for Petronet LNG, or let's say for, as you just explained before I joined the call, the 9% up Gujarat gas is completely unexplainable at the moment. Given it has the greater share of industry or the commercial side of the business, and that is where the allocation is least. So given the fact that it would be the most impacted in terms of earnings, however, the rise is unexplainable. As far as the Petronet LNG is concerned, I understand the market is baking in where there is a force majeure in place, but of course there would be impact to the earnings for these stocks as well. So yes, it's unexplainable at the moment, but it's my personal view that I would not really look at investing in these names at the moment. So that's my take on gas. And as far as the country's situation is concerned, of course, it is completely bad, and that's everybody's guess. It's where this goes from here.
All right, Dhaval, this has been an excellent conversation, and I hope we will see you more often on Money Control. Very comprehensive, very detailed, and lots of context so that our viewers can really understand what's going on in the oil and gas markets. Thank you very much. Have a good day, and definitely want to connect again soon. Thank you. Okay, so viewers, it's about 10 o'clock. It's time for us to sign off and take your leave. The good news for the market is that the bottom is not collapsing. The Nifty was down 300 points, but it's seen some buying, it's seen some recovery, and now it is down less than 200 points. And it is that kind of a market where there are people sitting on the fence, sitting with cash, they want to buy. The question is, when do you buy? Right? And no one has a clear answer. Some choose to come in today, some are waiting for another day. But it is that thought process and that sense of buying the dip from the medium to long term that explains the recovery. Pull up the Nifty. Let's pull up the intraday chart before we sign off. The Nifty is now down less than 1%. Mid-cap index is down about 1%. So very, very nicely, the dip has been bought at this point in time. Let's see if we can get those rates up. That's what I'm talking about, the recovery. That is the recovery. Look at that. We opened, fell like a pack of cards, and then the buyers have come in because there are people who are looking for solid bargains, medium to long-term bargains. These are the times when you buy in and then sit on those positions, and then you hope to make good money in the long term. And those long-term investors are very much around in the market as well. So it's not all gloom and doom. That's the mid-cap index for you. Okay, so as we sign off and take your leave on this edition of Opening Bell, let's leave you with the latest from the US President. Donald Trump on Wednesday said that his administration may cut off trade ties with Spain after the country was not cooperating with the United States. So Spain is the latest country to have come into Trump's crosshairs because, of course, Spain took a stance. Spain said that its soil, its land should not be used to launch any kind of wars. And the US President is not too happy with that. Hear him out. Thank you for watching, and we'll be back with more updates on Money Control very soon.
That's not a nice question.
Mr. President, Mr. President, did Spain, being after you told them that you would commerce ties with them, are they cooperating with the United States in Spain? Spain.
No, they're not. I think they're not cooperating at all. Spain, I think they've been very bad. Very bad. Not good at all. We may cut off trade with Spain.
You would guys all trade with them?
I don't know what Spain's doing. They've been very bad to NATO. They get protected. They don't want to pay their fair share. And they've been that way for many years. Let me give you the good news. Let me give you the good news. The people of Spain are fantastic. The leadership, like you. The leadership, not so good.